So, Zach, thank you so much for this carrier update brought to you, of course, by PowerFleet. What do we have today?
Yeah, so tender rejection rates, we talked about them, moving up this week because it's Memorial Day week. Capacity tends to tighten, and it looked like right before the end of the week, we saw that tender rejection rates jumped up here, back up over 24%, getting closer to 25% for the first time in a little while. Not that long ago, we have this still declining trend line with the tender rejection rates. So overall capacity has been slightly loosening. Memorial Day is supposed to be this bump in the tender rejection rate, but it came down over the weekend slightly, not dramatically by any means, only 0.12% here, but still that direction is unexpected for this time, especially as we get closer to the holiday. Lead times average around 2.5 to 3 days in general, so the difference between the request for the pickup date and the pickup date itself, tends to be the closer you get to the weekend. It gets, it starts to expand a little bit. The closer you get to the holiday, it expands. Tender rejection rates also increase when that happens. So, it is a little unusual to see this little downtick over the weekend. We didn't expect Memorial Day to be some sort of like blow up, situation like we saw around Easter and the end of March, but we did expect to see some level of consistency around the increasing tender rejection rate. So tomorrow and over the next couple of days, I don't know if I trust this little downtick by any means, but it is interesting to see a little bit of nuance here as we are approaching what is traditionally kind of the kickoff to the summer holiday season.
So, Zach, one of the other things you were mentioning earlier on is that carriers and, well, the industry is just getting more efficient. Do you think that's at play here or something a little bit more?
Well, yeah, I think we are seeing a little bit of normalization here in terms of people are starting to, understand or recognize some of these patterns that we've had over the last year. We'll talk about that moving forward. Let's go ahead and look at the volume here next. But demand has not really fallen off. If we look at our outbound tender volume index for the United States, it's really not moving. It's not coming down. So that to me tells me that, as we see this demand cycle kind of persist at an elevated level, anytime we see tender rejection rates come down, that means that carriers are just in better positions. We're seeing better, rates, rate compliance. They may be looking a little bit more attractive. We talked about that last week about how, increasing contract rates are also having kind of they're assisting the downward trend of the tender rejection rate. So let's look at the nation here and see our weighted rejection index in the map to see where the market's moving and changing and shifting over time. We've got the Atlanta market. Now, if you notice here, we've got Atlanta and Ontario. These are going to show up a lot on our weighted rejection index because they are the two largest markets in the United States. This is where a lot of freight flows in and out of. We've got Atlanta, of course, the southeastern hub. Definitely responsible for distributing throughout the southeast and all the way up the northeastern corridor here. And then, of course, Ontario, Port of Los Angeles, Long Beach, feeds this market and has been just, completely active and overwhelmed for most of the last year. However, we did see tender rejection rates kind of correct out of the Los Angeles market here in the last several months because carriers now know, hey, there's going to be freight in Los Angeles. But this week, week over week, these are the two hottest markets in the country in terms of tender rejection rates raising or increasing. There's a few markets out here. Houston has been a big, volatile market. Seen a lot more volumes. It's coming down this week. Montgomery, Alabama, and up there and around Omaha, Nebraska, tender rejection rates also kind of coming down there. But there's more blue than there is orange/red on this map. You can tell.
So a little bit of activity going on in Kansas as well. Anything of note?
No, that's, we do. I mean, it is interesting to see that Kansas is, the Midwest typically has a very volatile stretch. So we tend to see a lot of blue and red on the central part of the country because if you think about it, carriers are moving back and forth across the country, and they really focus on the high density areas. They want to go to markets where there's, these tall markets here. Those are the highest volume markets. They want to get to those. In general, that's because they have the most freight potential in them. And then when these tender rejection rates pop off, this is definitely two areas that, it's a no-brainer for a carrier when you're seeing blue in Ontario and Atlanta. It just means you need to get there. Go ahead and accept some freight into there if you can, especially if you have some contracted customers that need some capacity, you need to get in there. So let's check out Atlanta real quick. Let's look at their tender rejection trend. We've got These two markets are the largest in the country, but they have very different patterns right now. Atlanta, you can see since March, or really February, we have this increasing trend line for both the tender rejection and tender volume index. The tender volume index there in green, you can see this huge increase in tender volumes here over the last week. Tender rejection rates, of course, coming up as well to 26.84%. So it's above the national average in overall rejection rates. So when you have the largest market in the country increasing in demand, you're going to see some tightening in capacity. And of course, this is going to have impacts throughout the region, throughout the country when you have those two markets. Let's look at Ontario real fast. You see a little different trend line here. You see back at the start of the year, we had kind of a decline in demand and tender rejection rates. And we've seen that kind of persist, but it does have a little bit of a slight increase approaching the summer. So things aren't over yet, Anthony Smith.
Can't imagine that they will be, especially as more people going back to work, more stuff being purchased, more volumes being filled or remaining elevated.
Yeah, and of course, this is going to be, typically this is an off season for Southern California. Atlanta, it's not unusual to see this, but for Ontario, we tend to see things settle down in the winter and into the middle part of the summer before things take off in the early part of the fall.
Excellent, Zach. Thank you so much for that update. We'll be sure to check back in with you in a few moments.